Hi there, Jonathan Bayes with our October investment market outlook. And this month we're going to cover off the local economy and what we've seen in the last 4 to 6 weeks, a bit of an update too on the global economy, getting some mixed signals through in particular out of the United States. An update on the trade talks, which came to a bit of a head in recent weeks between the US and the Chinese. And lastly, just a bit of an update on our recommended portfolios. Unfortunately, markets have been kind to us in the last couple of months as well. So on the local economic front, whilst we feel pretty optimistic that things will look better in 2020, we've not yet seen any sign of a turn in the local economy. So key indicators in building, job advertisements, consumer confidence still very weak. Job advertisements down over 10% year on year. Building permits down about 23-24% year on year. The unemployment rate, whilst it looks optically strong at the moment, is likely to soften up given the weakness we've seen in job advertisements. And unsurprisingly, local households remain pretty reticent to spend. Consumer confidence at a 4-year low as well. We do think, however, though, with interest rates where they are, with the prospect of tax cuts being brought forward, perhaps to next year, maybe 2021 as well, and importantly too, improving auction clearance rates, we do feel pretty confident that 2020 will be a better year. But as I say, locally, it's still pretty weak, and it's likely that the annual general meeting season, where we will get trading updates from local corporates, it's likely to be a little bit disappointing, I would suggest. Internationally, the economy remains mixed. Those countries that are exposed on the export side to China, such as Germany and South Korea, are seeing really significant weakness in their industrial economies. In the United States, the economy's been very strong, but starting to become a bit two-tiered, if you will. Low interest rates are being really positive influences on the housing market in the United States, and that's also helping the consumer. So household spending in the US is very strong. The collapse in mortgage interest rates is putting more money in people's back pockets, and it's also encouraging an uptick in housing construction. So last month we saw a record, or certainly the best numbers in 10 years in building permits. The negative side of the US economy that's coming through in large part because of uncertainty related to the trade war is on the manufacturing side. And last month we saw the worst manufacturing sentiment figures in well over a decade in the United States. And there are concerns certainly that this could lead to a more pervasive degree of negativity in the US economy as we look into 2020. Within the recommended portfolios last month, we were quite pleased with their performance, notably the Australian equity piece. We don't want to focus too solely on the Aussie equity piece because it's just one part of a much bigger picture. But it was encouraging to see some of our long-standing bets in the likes of Nufarm, Downer Group, IOOF in particular, and BWX, alongside Afterpay continuing to push higher, significantly outperformed the benchmark. We've been tracking largely in line with the index through 2019, but we're really kind of pleased with the performance we saw in the last 6 weeks, and it's put us well ahead of the benchmark. And encouragingly, we think that there's some more good news to come through in the coming couple of months, and hopefully it'll leave us to round out the year with some strong performance.